Are you on the
Gold,
computer by chance? Is there any
gold
chance
interior.
you want to show us what you're looking at?
Yeah, I'm on the computer right now. All
Let's see.
right, hold on. Um, how do
So
we?
have you ever tried trading indices, or is that something that you just have no interest in?
I have. I did start to trade indices, but the whole problem was like since I moved to Pakistan, right? There's more volume in indices by NYC Open, and that for me personally, that's evening time when I have to give time to my kids and stuff like that, right? Because the evening you got to take them to the park and stuff like that. So I tried trading indices mostly at NY Open, pre-New York. There's some volume by like pre-London or London Open, but the time I have to trade is pre-New York and New York Open. And most of the times at that time, there's like no volume in indices. I tried US 30, but I failed at it miserably during that time. So I was like, hey, like you know what? It doesn't fit my trading plan at all.
There we go. That's fair enough. As
Yeah.
if something is working for you, why would you change it?
Exactly. Right.
Right.
That's it. And to be honest, this was all just I copied Ted basically. Like at the end of the day, because I remember when I first. So he had a webinar in the start, like very beginning, 2016. That was for about $350, right? And I bought it, and then I messaged him because he lives around 30 minutes away from me. I messaged him, hey man, listen, I'm paying you $350. If this is a scam, I'm gonna hunt you down because you live 30 minutes away. Okay, so be careful. He's like, no, 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 it's fine, it's fine. So I took that, and basically what I saw was he was only trading New York Open. That's it. New York Open. He was only trading gold. I remember he had a job at that same time too because he had to leave at like 8:30, and I had to go to my office as well at 8:30 because I was running a business. And by 8:20, he was gone. Because what we used to do was we used to do like private Zoom sessions where we would just like look at USD CAD, USD JPY, and gold, and we'll just say, okay, yeah, this may go up. Let's take a buy. Let's see. He'd take one trade and he would fuck off, right? But us, the new traders, we're like, okay, this is NY Open. Now we got to go to work. And then through work, we got to attack NYSE Open, right? This volume, we got to trade that. And then after that, we got to trade London Close because there's volume at London Close as well, And then if you're a real true dumbass, you're going to say, oh, okay, hold on. There's New York Close. There's volume at New York Close too at 4 p.m. Eastern. Let me go trade that too, you know? And that was the biggest mistake. So I looked at him. I'm like, okay, you know what? He's only taking one trade on one pair. That's it. So let me try that. So I tried that for 1 month, blew my mind. No strategy, no nothing, just watching one pair at one time of the market every day for a month. 100% you're going to start to see some similarities in its movement just during that time.
There we go.
Yeah.
That's something I picked up from Ted a few years ago too, and something that you were talking about, which is sticking to one pair. So what do you feel like that the advantage gives you? You're saying one session, one pair. What's the advantage there?
Like you start to understand the pair more. Like we trade. So I've actually traded FOMC live a lot of times, and just because we've been focusing on gold a lot during any USD news, we understood what's going to happen with gold. Because like if you've seen the last 3 FOMCs, you've seen that they have raised the rates, right? But when they raise the rates, gold obviously drops at that time, right? So this is the first one we saw. Gold drops because they raise the rates, and then all of a sudden at press conference at 2:30 p.m. Eastern, gold starts to go up because they start to talk about, okay, well, we've increased the rates, but at the same time, there's so much inflation, and inflation is negative for the dollar, right? So if it's negative, then they're like, okay, what? Pump up gold. Gold went up. The first time we saw that. Second time, same thing happened, buy stops. Third time, the same thing happened. So we took buys as price was going down because we knew that, okay, they're raising the rates, but there's still so much inflation. The cost of goods have increased, right? So once you focus on, let's say, one metal, gold, pound, yen, on every news, if you keep the news in mind and you keep what's really happening in the world, you can really start to understand how it's going to move, where it's going to move. So on our brokerage, we get stats every day, right? And the stats were almost 60% people were long on gold the past 2 weeks, 60%. And the reason why is because what they see technically is that we are in a bearish trend, right? So we're in a bearish trend on gold, let's say, and they start to automatically look at potential supports. You reach a support zone, let's say, for example, you reach a support zone right here. You're like, okay, we got a rejection, support. But if you look at smaller time frames, they keep continuing down. Gold starts to push down. But when you really understand that, okay, the trend is down, where the economy is going, and that what makes you realize that, okay, like, maybe it's not a buy yet if the high time frames don't turn. Because if you look at the fucking daily, man, like Raul had sells on golds too, right?
Yeah.
Yeah, right. And I'm looking at them, okay, well, fuck, perfect. Like, it's not like everyone's analysis is lining up perfectly. So it's a big difference it makes. Like, if you just focus on one pair, instrument, metal, whatever that is.
So now that the market's so low, are you actively looking for a counter trend trade, or do you just keep trading the trend until it turns around?
See, there are different ways, right? Right now, it's very, very bearish, but we're coming up to a very, very strong rejection area, 1692, 1694, right? What they're also talking about is in the next 3 or 4 months, things are going to get worse for the economy. And that would mean gold would go up, but it doesn't mean that you should just start to buy gold anticipating it to go up. What I'm probably going to look at on, let's say, a heavy bearish trend is confirmations of supports formation. Like, let's say, if you look at the 4-hour right here, right? So what we can see here is the 4-hour created a resistance at this point. So let me just remove these ones right here. This one, this one, this one. Okay, so 4-hour created a resistance right here. So which means that if we do, what the fuck? Hold on. So if we do break above 1707, there's a probability we can continue pushing up to 1718, 1719. The idea has never been to catch the entire correction. No, the idea is just to get like small bite-sized moves, like, 40 pips, 30 pips here, 50 pips there. So even if you look on the 1-hour time frame, you can clearly see that, okay, this is where price had some problems moving down, but essentially it created a better range right here, right? So if you look at this right here, so this is what I basically look at. So for me, if I want to ask myself, okay, Raja Banks, what's the probability that price is going to move above 1712 with ease versus what's the probability it's going to move with ease above, let's say, for example, 1702? Right? Because if you look to the left-hand side, there's a lot of range, a lot of consolidation, rejection. But once you break above 1712, you look to the left-hand side, you're like, okay, price had an easier time coming down, 95 pips. So maybe if I wait for price to break above 1712, I can not only get the correction, but I can also take a logical trade knowing that in the past, price moved down easily. So there's a probability I'm going to win this trade as price starts to move back up. So just waiting for 1712 to take buys. Is it
Incredible?
Yeah, and it's
So
really
really
too, man.
So you also don't. I know this is something with you, and Ted talks about this a lot. No trading view, MT4 only. So can you talk about the benefits of sticking to the meta quotes?
Your entries don't get delayed. Like sometimes guys are going to spend extra amount of time on TradingView. They're going to analyze charts and they're going to calculate risk and stuff like that. But when it comes time to execution, they're going to switch over and price may have moved a little bit.